All right, folks, right now we're going to jump over to our man Tim Ord. We talk to Tim every Tuesday and Thursday at 3:30. Put it on your calendar. You can reach Tim every trading day at his website, ord-oracle.com. Check that one out. And then don't forget, right under the services tab, folks, a couple of outstanding webinars. They're 90-minute webinars with our man Tim Ord right at TFNN.com. You hit that services tab, and you have the 6 secret ratios every trader should know. We talk about some of those ratios. We will today. And then the secret science of market tops with Tim Ord. And I don't know if we're at the top, but we got a little action today. Tim Ord, good afternoon.
Yeah, it's a little bit confusing here. I was kind of embarrassed. I thought, well, anyhow, let's look at the numbers and see what we can determine.
Everyone's a little, is it going up? Is it going down, Tim? I know we have record earnings and then we're negative across the board right now. But no, let's get into it, please.
Yeah, okay. As you know, I do a lot of stuff with the ticks and trend. And basically back at this last low, I kind of shaded it, blue right here. We had trend closes at above 1.2 and tick closes below minus 200. And usually when that happens, especially when you get a group of them, which you did back in mid-June, that's usually enough panic to get a rally going. Well, we got the same thing going on right here. Over just this week, we had a trend close there 1.22 with the 322 down tick reading. Tuesday we had a 1.43 trend, 264 down tick readings. Yesterday at 1.17, 400 and 3. You know, those tick and trend closes. This is on the close. Show panic, and panic only forms at bottoms. So we got actually a support area right in this region, which kind of contradicts some other stuff. So I'm not sure which one's drawing the long or the right conclusion. So let's look a little bit further here. I showed this chart on Tuesday, and then what I wanted to point out, back last Thursday, we had a trend close, the 10-day trend closed at 0.88. Anything below 0.9 is bearish. And all these pink areas I lined here up were times when the 10-day trend got below 0.9. So they become close. So we started having that going into the top. I'm thinking, okay, this is going to be an easy top to pick out. Well, right below that is a 3-day trend. And the 3-day trend coming in right now, as of yesterday's close, 1.27. And so I noted the times when the trend got to around 1.2 or higher, and that's all these blue areas right here. And the reason why I noted those are the times when actually, in this case, the market kind of went sideways. The market went sideways there. Market was actually at top there. So my point is, with the 3-day trend above 1.2, you can have still tops, but the odds are against it. So, okay, let's move on again. Now look, another indicator here. This is the weekly SPX tilt ratio. And we talked about this on Tuesday. You know, the market was going up, and actually we hit newer higher. This is a weekly chart. Yeah, we hit a higher high this week, and even the SPX tilt ratio made a lower high. So this over the last 3 weeks basically is kind of trending down where the market's been trending up. And in past, here's the last time that kind of happened, was going into the February-March high. The ratio was going down, the SPs were going up. So we got something similar here. So there's a lot of contradictions going on. So what do? You toss a coin and go with whatever you flip on. Well, no, you wait. Yeah, because something's about to happen, and the market always tells you right before it happens what it's going to do. And right now,
I like it.
The best thing it can tell you is they're going sideways, because it doesn't really. Because you got panic in this region, so you may push a little bit higher. And these indicators like this one, the X tilt ratio, it can remain in bearish territory for a number of weeks. So it can be bearish next week too, and the market kind of just maybe creep higher, not much higher. Then all of a sudden we'll get a signal. So that's how I'm viewing the market. I think ultimately we'll go down probably to the February highs, which is around 6,100 on the SPX. I just don't know when that's going to start, but I still think that's is going to start here fairly soon. I still think upside is minimal here because once this ratio starts going down, your upside is usually not much. Can creep up a little bit, but upside is limited. And also, we're entering into the bearish, the most bearish period of the year as far as a quarter goes. And so the best we can hope for in this time frame between now and October is probably a trading range. And I think that's what's going to develop. And we need a trading range to develop here. If you notice, we went from April to currently was straight up. We haven't had a pause yet. We haven't had Tom used to talk about ABC patterns all the time. Well, we haven't hit a B pattern yet. It may be developing here, but we haven't had one yet. And so the market at some point is going to take a timeout. All markets do, and we'll gauge it from there. But at best, I wouldn't short it here because there's too much panic in the ticks and trend. I wouldn't go long here because you got a divergence in the SPX tilt ratio. So that says a lot of nothing. But it's just I don't see a decent trade. Here's why I think it's going to happen. This is
I love it to jump in that TLT too. There's a big, and I love how it shows up on the ratio. And I was just looking at the TLT. That's quite a rise, even over the last 5 or 6 days. And just to add, we have some big tech earnings, and I know you're just looking at the charts. But even myself, I find myself saying today, and these are quite the companies, man. But if the market can't hold up when you have Facebook, Meta up 12%, right? You had Microsoft shares up to 555. We have Amazon ahead of their earnings up 1.6%. You have Nvidia was as high as 183, and every index is red right now, Tim. And I'm like, I just thought, as you're saying, where's the upside, right? I'm like, geez, where's the upside right now? If this market can't even hold green prices, I mean, those moves last night were just staggering right into the morning. So that's just kind of siding, with it makes sense. It does. We're coming into a break, Tim. Hang tight. All right. I see we're going to talk some more charts. We'll come back with our man, Tim Ward, folks. And yeah, we got markets in the red, and we get to do earnings again after the bell with Amazon. With their numbers after the bell, they're up by 1.6%, and Apple in the red. We're coming right back, folks. Welcome back, folks. We got markets slightly in the red. We have S&Ps off by 11 right now. NASDAQ 100 off by 78. We're talking to our man, Tim Ward. And don't forget, folks, right under that services tab, you can check out Tim's outstanding webinars, each of those 90 minutes long, and also at his website, ord-oracle.com. There it is. Check it out. All right, Tim, let's keep going. Where are we off to next?
This is the S&Ps, just to kind of finish up. This is a weekly SPX. Here's what I'm thinking is going to happen over the next, couple of weeks, or actually, I think we're going to enter into a trading range at least until September, maybe October. But we're probably making close to some sort of a high around here, but I don't have a trigger for a short, so I'm neutral. Let's flip to the gold issues. I keep showing this chart as it's telling the right story. This is the RSI of the monthly XAU. That's all it is. It's a good indicator. Chart goes back to 1988, and these are all the times the RSI reached above 70. We're at 72 area right now. So looking at a high, there's another chart here. Here's a short term. I had another chart, and for some reason I forgot to put it on. But anyhow, this is geared to short term to see exactly where we are, and the second window up from the bottom is the GDX up down volume with an 18-day average. So that measures the up volume against the down volume. You take an 18-day average of it. Next higher window is the GDX advanced decline with an 18-day average. So this is a trend following indicator. As long as it stays above minus 10, you're in uptrend. When you're below minus 10, you're in downtrend. It doesn't really try to take the exact high, but sometimes it does pretty well. But a lot of times you get divergences. Going into the April high, you can see the up-down volume and advanced decline indicators made lower highs. And that's when we got out up around the 50 range. The market fell back a little bit, came right back to the 50 range, and it's been going up in the 50 range since June. So almost 2 months now, really virtually going nowhere. Made a little higher high, and that ratio made lower highs. And finally, today we broke below minus 10 on both of them. And so even though the market really hasn't pulled back here, if these two indicators stay below minus 10, the market's going to pull back. And I've been saying over the last a couple of months, since April, at some point we're going to pull back down to 40. I think that pullback has actually started now. So I don't think we're going to rally back to the old highs. I think that probably the top is in at the last high, looks like late, I don't know, third week of July, wherever that high is right there. And since this indicator really, GDX really hadn't pulled back much, pulled back maybe a couple of points, and these two indicators fell right through the floor. And so that shows you the advanced decline and up-down volume really got weak. In other words, down volume increased and the down issues increased compared to the up issues. So that's usually a lot of times trending. We had one back in here, the market turned around, still went back up, but it still didn't really get past the 50 level. So I'm thinking we're pulling back probably with the S&Ps, but this one may pull back first as far as the GDX compared to the SPY. I think both markets will pull back together, and nothing significant. I think the 39-40 area is going to be major support. That's where the next big rally comes from. But I don't think that rally will start probably in maybe late September, early October timeframe, and they'll go on to new highs, because I have some other charts say the bigger trend's still up. So this is a timeout and an uptrend is what I'll call it, not a top of any significance. So
that's great stuff, man. I agree a lot with what you're saying, and it's always cool when number of indicators, and it's so cool. The GDX, XAU, HUI, all of them just completed. You'd say my dad talking about the A to B, C to D, right? ABCs. You go from that beginning of February last year, and then you take a B point of like October of last year, that high, and then they all pull back to where this run began. They all completed perfect, 1-to-1, A to B, C to Ds, and they're all just kind of chopping around right near those highs like you're talking about. So no matter what, that's quite a move when you complete a 1-to-1 and they all broke above it on that April acceleration, and it's almost like exact on every chart to like almost a tick that's where we are. So as you say, from that same logic, it's like, yeah, we had quite a run, folks. This has been quite a run as this market digests it, for sure.
Yeah, that's all it is. That's a good point. It's digesting. And so the reason why, let's look at this. This is just a gold and silver stock, USAS, American Gold and Silver. Here's a lot of stocks, what's going on right now. As before, I said to get a buy signal, this is a monthly American Gold and Silver going back to, 2021. You get a buy signal when you have a sign of strength through the mid-Bollinger Band. So anyhow, that day or that month is a buy signal. So you got a buy signal around close to 50 cents. And now when you get up above 80% above the upper Bollinger Band, in other words, things are too far stretched away from the norm, and the norm on a Bollinger Band is the mid-Bollinger Band. And here, right now, we got the high end, or you got 100% above the upper Bollinger Band right now. Last month, you're about 50% above the Bollinger Band. Now you're having to open and close above the Bollinger Band. So this stock is... There's a lot of stocks that have done this, and this is just one of them, but they're all kind of doing the same thing. They're way above the upper mid-Bollinger Band on the monthlies, and that's when you get a sell signal. So I say 80%, this one's 100%. And so where are you going to go? Well, you're going to go back, most likely support. Support on this one looks like about 65 area, somewhere in there, and that's where you should buy. So you should buy that next pullback. And these stocks will keep going up until the mid-Bollinger Band turns down. And I don't see that anywhere near happening unless you have a crash in the gold market. And I don't think that's going to happen. Once you get the mid-Bollinger turning up on the monthly time frame, it's up for months, if not years. So we're still in the early stages of a bull market. And the bull market will end when you close below this mid-Bollinger Band. And that don't happen because you got support right now. You had a sign of strength through the previous highs, which these highs back here. So now those previous highs should become support. So this is a big buy. This is just leg one up of you got a consolidation down to 65 and another big leg up. Here's a weekly chart of this stock. I own it. I'm not actually going to sell it just because I actually bought it below sport a little bit, so I might just hold it until sport. But here's a little bit easier to say. You can see the sinus strength through the previous high. The previous high is right there. That's looks like about 70 cents. So that's why I have the SOS. That stands for sinus strength. So you had a sinus strength through the previous high. That previous high now should be support. So you probably have something here. Then you'll break above these highs back here at some point.
Nice.
How long this is going to take? It might take a couple of months. I don't know. But we'll gauge it as we go forward. Actually, that's my last chart. So
hey, let me ask you,
yeah.
do you look at, thank you for such a great information, man. And those, and pointing out, folks, if you're trading those stocks, obviously high risk penny stocks, man, and and you're saying, the pullback percentage wise, right, on those equities, pull back to 65. Hey, do you look at sectors at all, Tim? We had one question about the semiconductors. You ever look at sectors, or does that work?
I can have them
I tell you
email
what,
me or email to you and email it to me, and we'll take a look at it.
Perfect. We'll get it. I'll have them email me, and we'll take a look at it on Tuesday, folks. Tim, thank you so much, man. Have a great week. Have a great weekend. We'll talk to you next Tuesday. We'll talk some semiconductors as well as the indexes. Appreciate it, man.
All right, will do. Thanks a lot.
Take care. Folks, we'll come right back. Stay tuned.